Hey everybody, welcome to Mortgage Today for Tuesday, September 12, 2023, and oh, what a day it was. The MBS were pretty flat on the morning. The small business optimism declined in August, according to the NFIB. This is the 20th consecutive month below the half-century average. We saw a decline in sales, with the highest percentage of small business owners reporting decline since August of 2020. Labor remains to be the biggest problem, both quality and cost, followed by inflation. September Fed meetings are notorious for coinciding with heightened volatility. The same can be said for the release of CPI data for any month in the past few years. The week ahead brings a new CPI release that happens to fall in the blackout period ahead of September's Fed meeting, which is 1 week after CPI, but very much on the market's mind. Volatility potential increases significantly starting Wednesday morning. Nick Timiraos of the Wall Street Journal, who has a reputation for, air quotes, understanding the Fed better than most, which means that they typically leak things to him, thinks the psychology of the Fed is changing. For the past year, the Fed has been unanimous that the risk to the economy is tightening too little, not too much. The balance of risk is changing, and more FOMC members are worrying about tightening too much, potentially causing a recession or financial turmoil. Home prices peaked in June of 2022, and apartment rents are beginning to level off as well. Rent growth rose just 0.28% year over year in August. Apartment supply is set to explode, with about 1 million units under construction. We are seeing big declines in places like Austin, Phoenix, Atlanta, and Las Vegas. Multifamily housing starts are beginning to decline as high interest rates discourage construction. Much like yesterday, which saw the narrowest 10-year range in 2 years, today was exceptionally sideways. If it weren't for a few minutes of highs in the early morning or the extent of the afternoon rally, it would have been just as narrow. As such, it's another day that adds to the sense of bracing for impact ahead of Wednesday's CPI data. It's always possible that big-ticket data will thread the needle and result in minimal movement. There's little question that any big departure from expectations will rock the bond boat better or worse. At the end of the day, we were down 5 basis points on the day. Stocks and the 10-year were flat. We also are getting news that's going to impact the housing market that several top insurance companies like Farmers, State Farm, and Allstate have reduced their footprint in California over the past several months. State Farm and Allstate say they are not writing any new homeowners insurance policies in California moving forward due to it being too expensive. And just ask a homeowner in any low-lying area of Florida, Louisiana, or the Carolinas how it's going. The CEO of the California MBA, Susan Milazzo, sent the latest effort to pass legislation to address California's insurance crisis has died. Assembly Democrats felt that the bill favored insurance companies over consumers, and they wanted to add a provision to prohibit insurance companies from not renewing any business through the end of the next year.